is your first take that in context this isn't such a big move for Facebook, or is it something that causes you to worry?
So I think these are problems that are specific to Facebook. I think the company is still trading at a higher number than it was a quarter ago. So it really rapidly rose. I think investors are counting on this growth for a very long time, and I think this was a bit of shock therapy. That's how it felt on the earnings call, that they were basically guiding that they're effectively hitting market saturation. I mean, 97% of the U.S. adult population is on Facebook. 90% of the adult population in Europe is on Facebook. At some point, these things do plateau, and then you have these, bigger conditions around security, privacy, GDPR around the company. So it feels like, the company's grown to where it could potentially grow, and it's going to be a harder road at this point. And that was the message that they seem to have communicated on the call.
Right, and if it's going to be a harder road from this point, then where's the growth going to come from, Hussein?
So the two obvious ones are Instagram and WhatsApp, right, which are both phenomenal acquisitions for Facebook and have seen similar kind of growth characteristics, but they're harder to monetize, and they're much younger, nascent businesses. So, the company's going to have to really play catch-up in order to kind of make up for the fact that their growth rate has stalled. The product is used by everybody. The product also hasn't changed very much in the last couple of years. And so they're going to have to get a little bit back to the drawing board to figure this out.
Hussein, thank you so much. Greatly appreciated this morning. We've got some news coming out on Qualcomm. This has been, I believe, expected. NXP says Qualcomm to purchase, ends purchase pack, and there's a $2 billion gift in compensation. James Bevan with us, Chief Investment Officer at CCLA. James, did you own Facebook? You're not a Facebook guy. Were you an owner here? Did you have a bad night?
We have some Facebook shares. It's an underweight position precisely because of the very clear risks associated with the business model. I have three takeaways from the results. First of all, the revenues were disappointing. Secondly, the costs are up, and that's a very bad cocktail. But thirdly, I was struck by the lack of control exhibited by management in the call. This was not an orderly call. This is not a call where they had all the ducks in a row and they had clear explanations. This was where they gradually unpacked more and more bad news in a manner that I think analysts generally found deeply concerning.
Do they need, within traditional buy-side Wall Street, global Wall Street, do they need an adult? Do they need to bring in a CEO who's an operational guy?
I think, Tom, that's a very astute observation about the lack of what goes on there. They need somebody to come in and to calm the markets, to calm the company, to demonstrate that things that have to be done well are done flawlessly. And that execution is going to be critical. Right. They are ramping up their cost base hugely, which will generate all sorts of challenges in the period ahead. And I don't think that revenue is nearly as important as the pickup in costs at the moment.
Well, I was with you in that everyone was looking at the revenue vectors and I was looking at the expense vectors, which are extraordinary. But the answer is they can taper those expenses. What is their constraint to limiting expense growth?
The real challenge is that they have some must-dos in order to remain an approved business to operate in Europe and in other jurisdictions. Facebook has said that it intends to roll out the European regulations across its global marketplace, but this is expensive. It's going to be a lot of monitoring, and inevitably the capacity to avoid upset is going to have lots of eyes on the screen, which means just more people.
Judging by the share price reaction alone, James, I would say this really was kind of a wake-up call for Facebook investors and Facebook watchers. Is it a wake-up call yet for the rest of the tech sector?
Oh, I think that the premise that share prices cannot rise vertically without increasing risk is something that all tech investors know all too well and are very aware of. And we've been a very significant investor in Amazon, for example, and we have been chopping the Amazon position back. Like a garden plant that gets out of control, we get the clippers out and down comes the position. And up it comes again as the share price accelerates. Out come the clippers and we do more cutting. I have to say that I think some people have been running these positions, have become immensely overweight, and they're the ones who are going to be feeling most of the pain today.